All right, traders, welcome to your July 9th explainer. Let's quickly break down today's pre-market action and macro drivers.
Right now, the broader market's stuck in a tight holding pattern. So what's actually going to break us out?
Looking at early futures, the Nasdaq is definitely leading the charge, trading a full percent above fair value.
But the S&P 500? It's pinned at 7,482, virtually unchanged since late May, a massive consolidation block.
This perfectly captures our core market tension. Optimistic Q2 earnings expectations just battling anxiety over inflation and rates.
Geopolitically, the US and Iran exchanged strikes overnight, but honestly, capital markets have effectively shrugged off the news.
On the macro front, initial jobless claims actually dropped to 215,000 this week, beating the street's consensus estimates.
However, continuing claims did tick up slightly to 1.81 million, returning to levels we saw back in March.
The big takeaway? Layoff activity remains extremely low, which could definitely keep the Fed cautious on cutting rates.
Moving to the energy complex, crude oil's catching a slight bid this morning, trading near $74 a barrel.
Checking the Treasury market. The rate-sensitive two-year note yield ticked down just a bit to 4.19%.
Meanwhile, the benchmark 10-year note yield remains stubbornly unchanged this morning, sitting exactly at 4.57%.
Pivoting to equities, we're seeing buy orders aggressively flowing back into the semiconductor space right now.
In fact, the VanEck Semiconductor ETF is already outperforming, jumping nearly 4% in today's pre-market action.
Interestingly, though, there is absolutely zero news or fundamental catalyst driving this massive semiconductor surge today.
It's just purely reflexive chop ahead of Q2 earnings. Losses one day, gains the next. Wash, rinse, repeat. So, here's your intraday playbook. Keep a close eye on these two specific catalysts as the session unfolds.
First up, at 10 a.m. Eastern, expect the existing home sales report. The street consensus is 4.2 million.
Then at 1 p.m. Eastern, watch out for the crucial results of the $22 billion 30-year Treasury bond auction.
As the opening bell approaches, the big question remains, will earnings growth or sticky inflation dictate the next breakout?